Hello there, viewers. Welcome back to another new video. Banks and their customers have a mutual relationship. We need them as much as they need us. Although we'd like to think our banks are looking out for us, they're not always as transparent as we'd like them to be. Whether you're spending money or saving it, banks have plenty of sneaky tricks which they employ to milk you for the most cash they possibly can. Today, we are gonna explore 9 dirty secrets banks don't want you to know. Number 1. Your bank account isn't worth the money you're paying for it. Some bank accounts offer a range of added extras, like free travel insurance, in exchange for a monthly fee. But unless you use all of the extras on offer, the account is probably not worth the money you're paying. Number 2. When you swipe, they cash in. When you spend using your debit or credit card, the retailer is typically charged a fee for processing the transaction. Most of that fee goes back to your bank, so even if you are spending your own money, the bank is still better off as a result. Number 3. They want you to make a mistake. Banks don't offer interest-free credit cards out of the goodness of their hearts. They are betting that you will make a mess of your repayments and end up with debt still to pay off when the 0% deal comes to an end. So don't slip up. Number 4. Running deposits last. Say you pay money into your account on the same day that you have a bunch of payments due to come out. Banks may run those payments first, meaning you fall into your overdraft and have to pay overdraft fees before running your deposit, which will bring you back into the black. Number 5. They might sit on your check. It can take many days to get your check to clear into your bank account, with banks able to delay the process for several reasons under the guise of ensuring everything is above board. This delay can easily see you fall into the red and have to pay more overdraft fees yet. Number 6. Banks want you to walk into their branches. The teller seems delighted to see you when you walk into a branch, but don't be fooled. Tellers always seem to be pushing for you to open new accounts, but that's because their jobs depend on it. They are salespeople and have quotas to meet. Each new account you open means they will receive a commission. Tellers are also required to send a certain amount of customers to the personal bankers at their desk. The biggest commission bankers receive is on large deposit accounts. To avoid being upsold on accounts and added extras you may not need, try to do all of your banking online. If you have questions, call customer service. They might try and upsell you too, but it's usually easier saying no over the phone than when you're face-to-face with the person. Number 6. A closed checking account can come back to haunt you. When you close a checking account, you assume that's it. Well, that may not be the case. There have been instances in which customers closed their checking account but forgot to switch over their autopay transactions, which caused their closed account to be charged anyway. This resulted in customers having to pay fees penalties. Number 7. You don't need that insurance. When you take out some form of credit, the bank will often try to sell you some insurance to cover your payments in case something happens to you. However, the small print of these insurance policies may mean that they won't actually cover all of the debt if you can't. You're better off making other plans. Number 8. Closing an unused credit card could hurt you. Banks look at your credit utilization rate when considering any applications for further loans. They want to see how much of the credit at your disposal you are using. If it's too high, you may look desperate. Closing an old card could push that rate up, denting your chances. Well, that's it for today. I hope you've enjoyed this video. If you have, hit like, share, and subscribe to our channel, and don't forget to hit the bell icon below. Thanks for watching.